Hello, everybody. We've got lots of other folk coming through, and we'll start off with some introductions in just a moment, and then we'll get stuck in, as they say. And let's dive into some introductions first of all. Let's go to Asahan first of all. Asahan, please tell us the following. So, who you are, where you are, what you do, and why the topic of reforming the financial system is of interest to you. So, who you are, where you are, what you do, and why the topic of reforming the system is of interest to you. Thank you very much.
Okay, thanks, Andy, and good morning. I think to the rest. My name is Asohan. I'm from Malaysia. Actually, I'm a human resource practitioner for the last 30 years, and recently involved extensively on national values for the country of Malaysia. So we have an organization that we call PUPO, which is an NGO, which talks about having national values as national interests. So the area that, Andy, I think through your transparency task force, I believe that there could be a lot of things that I could learn from today's sharing.
Thank you very much indeed. And where exactly are you in Malaysia? Where are you?
Kuala Lumpur.
Oh, Kuala Lumpur. Okay, thank you very much. Lovely. Let's now go to Mr. Patrick Dransfield. Patrick, please introduce yourself. Thank you.
Hello, I'm in Hong Kong, and why transparency in financial markets matter is that I've seen various people, including myself, be on the wrong end, and I think that ordinary people can find themselves bewildered and bewitched. And one of the examples, actually, very, very briefly, is during the COVID period of time, there were loans actually provided to small companies, but actually there was no real transparency as to what the actual loans meant, and quite a number of people misunderstood them. And that was actually, I think, quite deliberate. So I think, we need to make sure that people are aware of what they're signing for.
Thank you, Patrick. So you're in Hong Kong. Tell us a bit more about the firm you work for and what you actually do.
Okay, well, actually, I'm independent at the moment. The reason I mentioned that was because previously I was running an events company which had events around Asia and the Middle East, and of course, an events company under the present climate is in Kuala Lumpur. We used to regularly come to Kuala Lumpur in our time, but yeah, so I'm independent at the moment.
Thank you very much indeed, Patrick. Okay.
Hi, Patrick.
Please do feel comfortable to use the chat, folks. If you want to connect with people on the session, please do. Apart from anything else, this should be a very good networking opportunity for you all. Let's now go to Nicholas Morris, then we'll go to Joe Lau, then to Nigel Harper. Nicholas, lovely to see you as always. Nicholas is a very well-established, long-standing and highly supportive member of the Transparency Task Force. So great to have you with us, Nicholas, as always. So please do introduce yourself, Nicholas. Thank you.
So I'm in Melbourne, in Australia, and I'm a regulatory economist I'm a professor at La Trobe University in the law school, but I also work in Oxford. Co-edited a book on financial capital failure, and I also did some work on pensions in Australia, which led to a book on pensions. I've done a lot of work around the Southeast Asia, and the country I'm currently working most on is Indonesia.
Thank you very much indeed, Nicholas. Lovely. And Mr. Nigel Harper, who's a Brit. Nigel, please introduce yourself. Thank you.
Hi, Andy and others. Yes, I'm living in Eastbourne on the south coast in England, and it's a glorious day today. Perfect for immigrants to cross the channel, as they are doing by their thousands. But apart from that, my interest is banking per se. I've been in banking 51 years. I've taught bankers all my life, and I've got 3 degrees, and I enjoy harrowing the government and the Treasury and the Bank of England. I've just applied for a job with the Bank of England, and I've been selected for the first interview, which I'm looking forward to. And it is part of the PRA. So I'm really hoping that I succeed in that application. I have written a book recently, which is doing the rounds in the city. It's been delivered to all the MPs in the House of Commons. It's been delivered to the House of Lords and numerous other people. And it basically shows how we can easily clear up the issues that beset banking today. We have a real problem, and my recommendation is for 2 new regulators, namely for the controller for banking, who would police the board, chairman, and governance of the banks, and then the professional complaints regulator, who would police rigorously all agents working for bankers and capture them under the SMRC. So we've got a lot of work to do. There's a lot of resistance, obviously, because the politicians are the guys who are benefiting from what's going on in banking. They are the ones who are actually creaming off the profits for themselves. And I have to say, it's a very unholy alliance. And it's something that I feel very strongly about, as you probably gathered, and we've got to work together across the globe. And I'm very pleased to see my friend from Kuala Lumpur there, because the Chartered Banker Institute in Kuala Lumpur is a very active player. Have you come across them at all, Ashan?
Not really, Nigel, because I am more into the field of human resources. What we do is more in terms of building core values, corporate culture. These are the areas.
Yes, yes.
Yeah. But definitely there is a lot of impetus on that areas, because when we talk about whether we talk about transparency or whatever it is back to ethics, integrity, and all these areas, you see.
Yep.
Yeah.
And this is what we're all standing for on the panel today.
Precisely.
These are very interesting topics. We'll dive into those shortly. But before we talk about things like values and ethics, I'd be very keen to get everyone's comments about what the difference is in the culture in the banking and financial services sector in the UK to Hong Kong, Singapore, Malaysia, Asia. Nicholas, I know that you've got insights into sort of both ends of the hemisphere, so to speak, in this regard. Any thoughts, Nicholas, about the compare contrast cultural differences between the UK and Hong Kong, Singapore, Malaysia, Asia, etc., in terms of culture within the financial sector?
Well, you asked if I would speak at this, and I declined because I said it wasn't really my wheelhouse. But Southeast Asia, corruption is a way of life, and so clearly, whereas in places like Britain and America and Australia, although they are incredibly corrupt, they're corrupt in a different way, and corruption, explicit corruption, is something that is not practiced quite so explicitly. So it's different. The expectation in most of the countries I've worked in, so China, most of the Southeast Asian countries, is that clipping the ticket on the way through is the norm, and that things don't happen unless there's a transaction fee of some kind levied by people who are involved in the transaction. And however you want to, and it's very difficult for Westerners who are trying to operate with European rules, particularly European Union rules, to operate in a world like that, where the norms are different. And of course we have one can't say that too explicitly, but there's a societal, cultural difference in ways of doing things, which are just very different across the different countries.
And Nicholas, if I may, just before we ask Rick to introduce himself briefly, there was almost an inference in what you said that there's as much corruption over here as there is over there, but the corruption here is less kind of obvious. Is that the gist of what you were saying?
Well, that's my personal belief, yes.
Yeah.
Indeed, in many ways, we do it in much larger amounts. You know my views on just how awful the financial system in America, Britain, Australia is. We just allow it to happen, and we allow gambling on an industrial scale. We allow all kinds of things that ought to be regulated not to be regulated. We could go on forever about how we're deliberately blind to all kinds of things, and that's why TTF exists and all the things we try to fight against. If you look at the things that are explicitly corrupt in the less well-off countries, the numbers are much smaller normally than the amounts that are of money that are siphoned off. You'll remember my number for how much got siphoned off from the Australian pension system. Over a 20-year period, it was getting on for $1 trillion. These are very big numbers. And to fit $1 trillion into brown paper envelopes is really quite tricky. Sure. We do it in a different way.
Very interesting, Nicholas, very interesting. You're reminding me of a point that came up in an event we ran last week. Let me just share my screen, and I promise in a moment we'll go to Rick to introduce himself. Let me share my screen. So since we've been running our events on COVID, and this might be of interest to Patrick as an events guy, we've been obviously running our events on Zoom, and we've been recording them, and we've been editing the recordings and putting them out there on social media. There was an event we ran last week. Can you see this one here, Turning the Tide on Dirty Money? We had lots of attendees and lots of great speakers. And one of the speakers, Nicholas Silver, who's a very, very well-educated, very articulate and incredibly bright actuary and thought leader, etc., he made the point that the UK is nowhere near as corrupt as countries like, I think you mentioned Nigeria and Malawi, parts of the African continent. And one of the other speakers, Brian Basham, basically said, you better not believe it, We have a completely different kind of corruption here. It's more a institutionalized, legitimized form of corruption, but it still is. And that sparked off quite an interesting debate. I'll put a note in the chat to this webpage, because as you can see, we've got lots of events that you may have missed in the past that you might want to go and have a look at. It could be of some interest to you. I'll put that in the chat.
Yes, I mean, it would be very interesting to compare estimates of the total amount that gets siphoned off by our type of corruption against the total amount that gets siphoned off by the type of corruption which occurs in the, if you like, unregulated corruption, which occurs in the less regulated countries. My guess is you would find that the numbers are rather smaller in the unregulated countries just because their economies are smaller and they're poorer and all those things.
That's really interesting. Bizarrely enough, one of the speakers at the event was Duncan, head of policy at Transparency International. If you don't know Transparency International, it's basically the worldwide source of activity to try to mitigate corruption around the world. Very good organisation. And so there he was speaking at our event on the Thursday, I think it was. And then on the Monday night, there I was watching TV, BBC Panorama. There was a big piece covering the Pandora Papers, which I'm sure everyone's heard about. And
Yep.
there was Duncan Hames from Transparency International talking at the event, really sort of emphasising just how bad this kind of stuff is. Really interesting chat so far. Thank you, Nicholas. Mr. Rick Atkinson, lovely to see.
One thing I should have said is that I'm currently doing a lot of work on FATF. Okay. So on the anti-money laundering and terrorist finance stuff, which is also rather interesting.
It is.
And it's not obvious which countries are worst
Really
there either. And when you dig down into Australia, we don't score very well on that.
And what are the drivers behind that, Nicholas? Why is it so bad? Is it a lack of oversight? Is it just greed and criminalism? What is it?
Well, for example, down here, we rather like our casinos.
Okay.
And we like attracting the high rollers, and we've got a big casino industry. And of course, that brings with it people that are laundering money, and partly Chinese, but also other countries. Money that they really oughtn't to have, they bring to the casinos to legitimize, and we turn a blind eye to it.
Right.
And we're currently investigating that, and both Crown and Star are now being investigated and not looking too good for so even countries that are supposedly as organized as Australia are finding that they're not really controlling these things.
Nicholas, you just said something which really, really worries me, this idea of turning a blind eye to it. Again, that's an idea, a theme that came up in our event recently on turning the tide on dirty money. This idea that, and we were talking about the UK, this idea that the UK knows it is a global centre for dirty money, money laundering, etc., drug money, terrorist money, Russian money, so on and so forth. It knows that that's the reality, but it suffers from willful blindness. It is actually actively ignoring the reality of what's going on because it in some ways serves it to be that way. So this idea...
Well, we'd like somebody to fund our football clubs, wouldn't we? For example.
There we go. There we go. Yeah. There we go. Just in case there are folks on the channel, on the session that don't know the story behind this, Nicholas, could you please just elaborate briefly on that comment? Because I think it's very funny. Go on, go for it.
Well, we were just talking about money laundering and terrorist finance, and I mentioned that down here we're having an investigations into our casinos. I'm in Australia, and we'd been really quite lax in looking at all the high rollers that we'd attracted to our casinos, who, of course, were bringing with them money that they really shouldn't have had, from many countries, partly Middle East, partly Asia, and partly Africa, and it's only now that we're beginning to notice that they shouldn't have had it, and we like that. We've made a lot of money and a lot of taxation revenue from these casinos, so it's been a great industry for us.
We have a counter story here in the UK. So one of our great football teams, Newcastle United, was bought recently by, I'm pretty sure it's Saudi Arabia, and that's led to all kinds of activity online about why that's happened and what the real motives are and where the money's really come from. It does seem as though this theme of turning the tide on dirty money is a theme that resonates really, really well. In a moment, I'm going to ask Asahan to elaborate on the comment he put in the chat about is GDP a really good measure anymore? But first of all, Before we go to that, let's invite Rick and then Gavin, then Henri to introduce themselves. Rick, lovely to see you. Please do take time to introduce yourself. Thank you.
Yeah, I'm in Hong Kong. First one I've done, I don't recognise anybody. I've been in Hong Kong 25 years, and we're an evidence-based wealth management firm, fiduciary.
Thank you, Rick. And Rick has explained to me on a few occasions there are very few firms in Hong Kong that are really providing proper client-centric, fee-based.
And none of the banks, for sure. The banks are absolute law to themselves.
Yeah. It's a theme that comes up time and time again. Rick, thank you very much for being here. Please do chip into the conversation as we go. Yeah. Gavin, lovely to see you. I think this is the first time for you at one of these events as well, as is for a few others. Gavin, please tell us all a bit about where you are, what you do, and why this topic of reforming the financial system is of interest to you, please. Gavin, thank you.
Hi, everyone. I am based in Hong Kong. I don't work at a bank, lucky, Rick. I work at a life insurance company. So I work at FWD, which is
nearly as bad.
I think it's insurance is a long way to come as well. To be honest, in Asia, right? I am fortunate enough to be working in a sort of a capacity and in a company that is actually looking to change things for the better for customers. So I personally sort of have worked on a project really just to focus on simplifying communications, right, for customers, starting with contracts, right, which are renowned for being ridiculously complex, even for practitioners in the industry. So we've taken the forefront of doing this, and we're spreading this to sort of all throughout all of our documents, and really try and take a leadership position in all of our markets. We're the only Asian-based insurance company, funnily enough, and I think that gives us a real sort of opportunity and responsibility, right, to sort of lead change in the industry. So I'm here because I just have a personal sort of interest in improving things and seeing things from a customer perspective. And my role is sort of in brand and marketing is really to kind of keep an eye on what is happening and what other sort of best and promising developments, from around the world really, and what we can bring back and seek to kind of champion within our market and for our brand and customers. Nice to see you all.
Gavin, did you say the only Asian-based insurance company?
Purely Asian-based. Yeah. As far as I'm aware, many other players are Asian focused, right? But they have operations, elsewhere outside of Asia, right?
But you're only in Hong Kong?
We're only in Asia. So we have Hong Kong, Singapore, Malaysia, Indonesia, Vietnam, Philippines, just opened in Cambodia. We also have business in Japan.
What about AIA? They're just exactly the same as what you just described.
AIA are in Australia, well, I presume. They're also in.
I thought Australia was part of
US. They're also in the US. So
didn't know that. Okay.
Interesting stuff. And Gavin, a question for you. You talked about some very good sort of thoughts there and initiatives. Are you finding any pushback from within either your own firm or stakeholders outside your firm who appear to perhaps be reluctant to go down this route of better, clearer communications and more transparency? Is everyone buying?
Of course. I mean, not for sort of any reason, any sort of spiteful reason or wanting to kind of protect any particular kind of nefarious interests. I think you're always going to get resistance, right, to any sort of change because various reasons. Most of the time it's new, right? So these are kind of skills and ways of thinking that are foreign to people who have been in an industry for a very long period of time, right? So there's that. We also get resistance because it takes time and effort right? And of course, we always have to balance kind of commercial considerations and imperatives with the need to do something different. But the good thing about what we've done, we're only 8 years old, right? So we're sort of a startup mentality. We attract people who want to make a change, right? People who have been in insurance for a long time, but have kind of become a bit jaded and really want to see this opportunity as sort of being able to do things differently. And we also attract a lot of people from outside the industry. We also, have encountered a fair bit of resistance from industry stakeholders like regulators that as we've sort of made these changes, but as we work through and explain that everything we're doing is really just based around a desire to kind of put customers first, it quickly, I find anyway, it quickly sort of becomes clear that what we're doing is really something which should be embraced.
I'm going to stay with this because you've hit on a very interesting theme. Something we sometimes think within the Transparency Task Force is that new entrants, disruptors, new entities on the block are far better placed to actually stir things up and do things differently. They really are. Almost by definition, it suits them to go about things in a very different and fresh way and to really challenge the status quo. Whereas big, old, established companies have got so many legacy issues, be that operational issues, technology platforms, cultural legacy, leadership legacy. They're so kind of up to their eyeballs in things of the past that they really, really, really find it difficult to change. Gavin, what would your comment be to that? And I'd be very keen to see what others think about it as well.
I would wholeheartedly agree, right? That it's very difficult to sort of do meaningful change within an established organization. Not that that's a bad thing, right? Because, part of, and I'm more talking about from a brand perspective, right? Like part of the benefits of having a sort of a long-term established brand is that customers kind of have that trust, right? They see that you've been around for a long time and you already get the benefits of that, right? So we struggle with that as being a new brand, right? But, the drawbacks, of course, are, it's very difficult to kind of make change, right? And that is the advantage that we have. So, I have no, if I were to sort of, provide some advice to sort of establish insurance companies, and I've worked in sort of in those sorts of environments. I don't think it's impossible to kind of make change, but I think it's a very sort of, it's a much harder sort of thing to get started, right? You really do need, I guess, the support and the very clear sort of mandate from the top.
Yeah.
Sort of wanting to embrace it. Again, that's one of the reasons why I'm sort of fortunate to be in a more nimble company.
Thank you, Gavin. Again, we'll finish off some other introductions shortly as we've had a few guys join late. But would anybody else like to comment on this idea that big old firms find it extremely difficult to actually change, whether that's culturally, operationally, IT platform? Anyone else want to say something to that point?
I can add something a little bit, Andy.
Yes, please, Scott. Thank you.
Trelaw here. It feels, at least we're in asset management, and it feels the big firms have this kind of what you might call vintage technology that's just never really going to upgrade it. They've got often, at least in asset management, very manual processes. They have the wrong mindset from the top down. It's sort of in asset management, it's about how do I grow fees, not how do I put the customer first. So you never see media stories about how much value asset managers have created for customers. You see stories about, are their revenues going up or down. So that, I think fundamentally they're really challenged, right? It feels, well, we hope it's like Kodak. They can see the future is going to be bad. They just can't get out of the way of themselves. I guess the one thing somebody once said, which might be relevant, is it's kind of a race between the incumbents getting innovation versus the sort of startups getting distribution. So who can kind of get there first? But primarily, I mean, fundamentally, it looks super difficult for incumbents to really do good things for their customers and for the future.
Thank you, Scott. And while you're speaking, Scott, finish off your introduction. So tell everybody a little bit more about you and what you do and where you are and so on. Thank you.
Sure. Sorry, quickly. So asset management, what tends to happen is the brand issue. People would like to invest in more value-creating managers, which are often the sort of emerging, nimbler, more hungry fund managers. But because there are sort of frictions in the whole process, people tend to sort of default to the big brand names, and so they get a bad outcome. And the small managers don't get capital. So the way to solve that is technology. We're essentially kind of, sort of Uber or Amazoning the industry to bypass a lot of the big fund houses, to more directly connect investors to fund managers and do it sort of in an online way. So in other words, it's like the matrix. They actually sending these emerging managers are sending their trading strategies through to us, and we execute. And then we can dynamically allocate capital to these different sort of trading streams to create customized solutions for investors. And this can all happen in a sort of real-time, risk-controlled, online, fully transparent, aligned way that gives investors access to managers they otherwise couldn't get access to. So it's really trying to use technology to bypass all of those big incumbents and give investors a much better performance outcome.
Thank you, Scott. Thank you. And let's please go to Supriya. I hope I pronounced that correctly, Supriya. If I'm not, please don't hesitate to tell me. Please take the opportunity to introduce yourself. So tell us who you are, where you are, what you do, and why this topic of reforming the financial system in Asia is of interest to you. Thank you, Supriya, for being with us. Thank you.
Thank you. Thank you for the invitation to join this meeting. I must say that I come at financial transparency from a slightly different angle. First of all, sorry for being late. I was at another meeting and I could not join before. But on one hand, I'm a banker, former banker, both at banks like Citibank and GE Capital, where I was a project finance specialist and a buy-side investment manager at a number of private equity firms. But also I worked at the World Bank and the Asian Development Bank. Now I'm on a number of boards in which I lead the sustainability angle, sustainability and safety. And the reason I come at this is that it's no longer just about the dollar that we are going after. It's the carbon weighted dollar, because we are really looking at the impact of all our actions on all the forms of capital. It's not just financial capital, but it's manufacturing capital, it is environmental capital, it's human capital, it's organizational capital. And the question is that on the one hand, while we have to use capital to grow, but doing it in a manner that captures the externalities of that expenditure is still not been possible. And until that comes through in every micro transaction that we make, whether it's in the payment space or it's in the allocation of capital in the billions and the trillions, until that true cost comes into the actions that we do every day as individuals, as firms, as regulators, we cannot, survive. And the other thing that I would say is that if we hadn't, it's a bit like an old man who realizes that he has spent his misspent youth in getting to be an absolute alcoholic and whatnot, and now regretting it, and so have to take in supplements at a better rate than before. It's like that for the whole planet. And so it's actually an emergency. And if we, as at the helms of capital, responsible capital, don't recognize this and do what we can, so that's why I joined. So transparency is mainly, I know that the exchanges enforce rules for transparency, risk management, governance, but it's also about the environment, animal protection, and all these lesser known and lesser cared about. So that's why.
So thank you so much for being here. And I'm going to share some information about the Transparency Task Force shortly, because a lot of you are brand new to the TTF, and I hope you realise when I've done that, Supriya, that what you've just outlined is very much in keeping with the way that we see things too. Great to have you with us, and I absolutely agree. I've never heard the phrase "the carbon-weighted dollar" before. I like that. I really do get that. Thanks all. This is great. In roughly 10 minutes or so, Henri is going to be carrying out a speaking slot for us, but we'll keep the event pretty kind of conversational and relaxed as it is now. What I'm going to do is share my screen and take you all through various different parts of our website just to help you understand what we do. So the Transparency Task Force has a mission. And our mission, and these are the exact words, it's a properly defined mission. Our mission is to promote ongoing reform of the financial sector so that it serves society better. And that's what we're all about. We're all about organising ourselves to have a positive influence on the way the financial system works. We do this in many, many different ways. One of the ways we do it is by way of consultation responses. Now, 2021 has been a phenomenally busy year for us. We've worked extremely hard during 2021. I think it's probably true, I do not know this, but I'm guessing it's probably true that within the UK, the Transparency Task Force has responded to more consultations than any other organisation. And I think that's quite an achievement. And when we respond, we always respond cognizant of what we call our North Star question. Our North Star question is the question that we use to govern all that we do, to give us direction and to give us a mandate for the work that we operate. And the question is very simple. The question is, what is best for the consumer? So we are absolutely about looking at things from the client's perspective, not the industry's perspective. So we are definitely not a trade body. We are definitely not a professional association. We are a collaborative campaigning community that is dedicated to driving up the levels of transparency and client care in the financial ecosystem. That is what we're all about. Now, interestingly, one of these consultations, in fact, this one here, I'm just highlighting it, and I'll put a link to this page in the chat in case you want to download any of these. That consultation was a very special one for us. It was the ASIC consultation. ASIC is the Australian regulator about promoting access to affordable advice to consumers. And I'm really, really keen that we at TTF, Transparency Task Force, put in a consultation response in relation to stuff going on in Singapore, in Hong Kong, in Malaysia, elsewhere too. So if you become aware of any financial regulatory consultation, be it government-led or regulator-led, please do make me aware of it, because I'd be very keen that we got involved in that way. So that's a bit about the consultation work that we do. I'm also going to show you this page. This is our TTF International Initiative webpage. This all came about because in 2019, I personally organised and ran meetings and spoke at meetings that we ran, the Transparency Task Force meetings in Dublin, Amsterdam, Zurich, Brussels, Hong Kong, Singapore, Sydney and Melbourne, Washington, DC, Boston and New York. And the net result is that we have what we call TTF USA, and TTF Asia, and TTF Europe, and TTF Australia, Canada, and Africa. So altogether, we have approximately 4,000 people in our network around the world. Roughly 2,500 of those are in the UK, and the rest are in other countries. Of course, this event is all about Asia, and you'll notice here that we have a group meeting for our Asia community on Tuesday, November the 2nd at 4 p.m. Hong Kong and Singapore time, 1:30 India time, 8 a.m. my time. And these are just kind of periodical catch-up meetings. So again, I will put a link to this information in the chat, and the notes in the chat will be circulated afterwards. The session's being recorded, by the way, like with all of our events. We'll turn it into a video recording, and we'll get it out there. So that's the international initiative of the Transparency Task Force. The next thing I want to show you is our ambassadors. So very roughly, about 10% of our community get invited to become ambassadors. And our ambassadors are people that we feel are very, very well aligned, strongly aligned to our work. We have ambassadors from 21 countries, I think it is there. As I say, they represent if you like, the cream of the cream within our community. For Asia, we have some ambassadors in Singapore, these folk here. We're always looking out for more ambassadors, by the way. Ambassadors are individuals who are, particularly fans of the TTF. You can see we've got Scott there, for example, who's with us today. Also in Hong Kong, where are we, Hong Kong? Where's Hong Kong? Here it is. We have some ambassadors in Hong Kong as well, as you can see here. And we've got many, 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 many ambassadors in Australia. You can see Rick is with us here today, and others as well. So we're always looking to grow our ambassadors network. To be an ambassador, you need to be somebody who is, if you like, strongly aligned with the principle that there needs to be greater transparency and truthfulness and trustworthiness in the financial system. This is our 2020 annual report. Now, please bear in mind that the Transparency Task Force is a very underfunded organization. Despite that, we are very hardworking, pretty effective. We've got all sorts of fingers in all sorts of pies in terms of influencing the way the financial system works, mostly in the UK, of course, mostly in the UK, but we're doing more and more and more and more outside of the UK. And again, I'll put this link to this annual report in the chat. So if you want to, you can learn more about what we do. Here's our manifesto. Our mission, as I said earlier, these exact words, is to promote ongoing reform of the financial sector so that it serves society better. And our vision is to build a highly respected, international and influential institution that helps to ensure consumers are treated fairly by the financial sector. So that's what we're doing, and that's what we're doing today. Part of today is all about galvanizing support for the reform that's needed, another small step towards building a truly respected international and influential institution. When Supriya was speaking earlier, I made the comment I'd come on to trying to sort of evidence the fact that we're very closely aligned with what Supriya has been speaking about there. These are the 25 different groups that we run. We cover a very broad range of topics. Obviously, for example, banks and builder societies. We have one called Females for Fairer Finance, which Supriya obviously will put you into. We have one called Pisces, and I was thinking about our Pisces group when Supriya was speaking, because our Pisces group, I'm going to click on the link here, our Pisces group is all about these things here. The P is for purpose, the idea that the financial sector needs to embrace a sense of purpose. The I is for impact investing. The S is for sustainability. The C is for climate change. The E is for environment, social and governance. And the S is for socially responsible investing. So Supriya, I assure you, we are very well aligned to the sorts of issues that you clearly care about a great deal. And just to evidence that further, I'm going to show you our events program for 2021. Later this year in November, I'll find the exact date in a moment, we have an event entitled Accelerating Our Journey Towards a Green Economy Before It's Too Late. And we'll have all kinds of speakers talking about things to do with climate change and sustainability. And as Supriya put it so well, the idea of it's, the carbon weighted dollar. So let me just find the date for interest for you. Here it is, Tuesday, November the 16th, Accelerating Our Journey Towards a Green Economy Before It's Too Late. And we normally run that event maybe once or twice a year. Okay, I'm also going to show you this. This is a database called Violation Tracker. It's a US-based database, but we have successfully organized for it to come to the UK. So the people who make this database, based in Washington, DC, they will be producing a UK version. It's going to be launched at the end of November, early December. It's a fascinating database. You can search it in many ways. One of the ways you can search it is by offence groups. So, for example, bearing in mind what Supriya was saying earlier, one of the ways you can search the database is by clicking on the different offence groups. Here's environment-related offences. This will be of particular interest to Supriya, I'm sure. You click on that link and it takes you to lots of detail. In fact, there are $114 billion worth of fines for environment-related offences, a total of 72,680 transactions. And being British, I'm rather embarrassed to say that the worst offending company is BP, that's British Petroleum, our major oil company. But you can see these other firms as well. Many of them are household names, like ExxonMobil and Daimler, etc. The database.
Isn't this sort of, sorry to ask you a question. Yeah, isn't please. This sort of weighted by the fact that some jurisdictions have more data that they are willing to share, and the governance around it is better, and therefore they are measuring it more versus others where it's all,
Yeah, I get your point, and I would understand why you say that, but all of this data is not provided by the companies, it is provided by the courts or the regulators. So I'll finish off what I'm saying, then I'll come back to this point in a moment. So what you can do with it, for example, is, let's say you wanted to know about this particular matter, a company called Transocean. It gives you the write-up of this particular offence, $211 million worth of fine against this firm for its involvement with the Deepwater Horizon catastrophe, to help resolve those claims. So lots of detail. To answer your question more specifically, Supriya, there's a bit in the page where you go here, which is the agency data sources. So these are the agencies that provide the data for it. So the information is coming from regulatory bodies, from the courts and so on. It's not actually dependent upon which companies are giving the data. We are getting this up and running in the UK. We are involved in helping it to become established in Europe as well. And the final point I'll show before we move on to Henri for his speaking slot is, if we click on industry totals, what we've got is a list of the 51 industries ranked according to how bad they are. So the worst is at the top. And you'll see when I get there, of all the industries, the worst is the financial services sector. The financial services sector is the most violating of all industries. In fact, the amounts are so great, the total is $333 billion. That in the database as a whole, it's roughly twice that figure. So putting it another way, financial services is half of the total, or putting it another way, if you add up all of the other industries from number 2, which is pharmaceuticals, to number 3, which is oil and gas, number 4, motor vehicles, and all of these others going all the way down to miscellaneous at the bottom, all of them added together add up to financial services. So that, I would suggest, indicates there's a real problem with the conduct within the financial sector. And that is why we are very busy doing the work that we're doing. Just before we go to Henri to give him a chance to share his thoughts and his ideas about this topic, I'll just go to gallery view so I can see you all. We'll invite Sam in a moment to introduce himself. But before we do, does anybody have anything they'd like to say before we move on, either in response to what I've just been talking about or indeed anything else? So just wave at me if you want to say something. Otherwise, we'll move on. I think we'll move on. Sam, lovely to have you with us. Sam, could you please introduce yourself, Sam, so we know who you are? Tell us, and also turn your camera on so we can see if you don't mind. Sam, who are you, where are you, what you do, and why you're here? So why is this topic of interest to you? Thanks, Sam.
Yeah, hi everyone. So I'm Sam Harley. I work for Piedmont Wealth Management in Hong Kong. So yeah, I'm just generally interested in contributing to in this kind of area, just because we're all aware. Well, in every country, there's things that I guess can be improved in terms of transparency, but I think even more so in Asia, when some of us may have came from more regulated environments and moved to countries where the regulation is maybe a bit behind that, then it's even more important yet to be driving that. So I was made aware of the group quite a while ago, but just been wanting to get more involved. So that's why I'm here today.
Thank you, Sam, very much for being here. How long have you been operating out in Hong Kong?
About 2 years now.
Okay, and how are you finding it? It must be quite a difference. I'm assuming you were in the UK before.
I had a brief stint in Shanghai, which was where there's like no regulation, and then before that I was in the UK. So it's all going good. All going good. It just is an adjustment from the kind of rules that we're used to with the FCA. So it's always a learning process. And
thank you.
Yeah.
Sam, thank you very much. Thank you. Could I please invite everybody to put your hands together to thank Henri for the session he's about to share with us. Thank you very much indeed, Henri. Thank you for sharing your time with us and for presenting whatever it is you are about to present. So, Henri, I'm aware you haven't yet had a chance to introduce yourself. So obviously, start there. Tell us all about yourself, where you are, what you do, why the topics of interest to you, and then feel free, please, to move into what you'd like to discuss. Thank you very much.
Absolutely. Thank you very much, Andy, for having this, and thank you everybody for making time to talk about the future of finance, future of money, especially in topics like transparency and actually reforming the financial sector. Cryptocurrencies are obviously a very, very big topic on that. As Andy mentioned, my official title is I'm a PwC partner and a global crypto leader, where I run up to our crypto operations in 25 countries, where we're over 400 people. We've done over 400 crypto engagements the last 36 months. But I'm also an adjunct professor at the University of Hong Kong, where I've been teaching the first fintech university course in the world since 2015. But also, I think many of you know via my social media, where I have weekly content on the future of money that is shared with my half a million followers, and also a lot of policy making work. I sit on many advisory boards and regulators boards, including the one in Dubai where I am right now, but also the SFC's advisory board as that of the HKMA as well on many of these topics. So very, very excited to be sharing with you all on the topic of the future of money and some of the issues on transparency. Maybe what I'm hoping to do next 5-7 minutes, just share with you some of the big trends that are really taking place right now that have an impact when we come about transparency and the future of money that could be relevant, and how we can discuss it immediately after. And really what I want to focus on is really 4 things, nothing more, nothing less, that have a very, very big impact right now on the future of money from that perspective. We were talking before about the banks, for example. I've been in crypto since 2013. So I've been now in a space for about 8 years, which is quite obviously early on. And I'm a lawyer and a banker by background. I was many years in the hedge fund industry as a hedge fund lawyer in the early days as well. One big trend that we are seeing right now in the crypto space, which is affecting many of you in the asset management sector, is we are definitely seeing the rise of institutional investors entering the space. Not a day goes by now we don't see one of the big hedge funds, family office, buy side, sell side providers entering the space. And as was mentioned right now, one of the big challenges we've had is it's very difficult for these organizations to bring crypto within the ecosystem, and which is obviously causing a lot of challenges from that perspective. So obviously the space is moving. And one of the big, when it comes to topics like transparency, reforming the system, I really believe that everything we're trying in the last couple of years were great. It's nice. But really crypto enables us to really make some of these feel good. We're talking about the ESG. It's all good. It's cute. A lot of European investors had it on their investment checklist. But now actually with crypto, we're really able to change this. And I'll give you guys 3 examples how this is happening from that perspective. One of them is really when it comes to, for example, the rise of central bank digital currencies. Today, 86% of central banks are looking at central bank digital currency. Again, Bitcoin is fully decentralized. Nobody can control it. And the central bankers, what they realize is there's a lot of, obviously, if you're a central banker today and you love Bitcoin, you're absolutely crazy. But it's a bit like a taxi industry or the black cab industry in London being excited to see Uber come in the market. However, the banks are a bit smarter than the black cabs. What they did is actually they embrace a lot of the innovations of cryptocurrencies and actually launched them themselves. For example, right now you're seeing a lot of the 86% of central banks are getting into it. Literally by the next 2 months, 2 quarters, we will see China launch its own CBDC, the digital yuan. It already has over $5 billion of value of transactions being done, over 1.3 million use cases, and numerous activities going on there. What it means for 2 things for financial institutions. One of them is every single financial institution over the next couple of years will need to get plugged in to the CBDC rails of depending how things evolve. But also when it comes to transparency, for the first time, CBDCs allow us not only better monetary policy, monitoring from a policymaking perspective, give us basically a fighting chance against tax evasion. Many countries in Italy, like in Greece, for example, up to 20 to 30% of their payments still happen in cash. Not because people love cash, because obviously it allows you to operate in the black economy. And probably closer to home when it comes to transparency is really when it comes to corruption. The idea of corrupting Andy, like with an envelope of money, worked before. With CBDC, it's impossible. Corruption with cash or money will be a thing of the past with CBDC. There's still a lot of other ways for corrupting people. You can send their kids into Harvard, you can give them bottles of wine, nice watches, but at least corruption and money will be a thing of the past. And this is happening right now. Our generation, all of us on the call today, we will see the appearance of a third form of central bank money, basically digital currency. And that is happening, will happen really over the next couple of months. It will take longer in Europe because of privacy concerns and others, but this is really something that we will see in our lifetime. So that's one. And I think that has a meaningful, significant impact when it comes to transparency and reforming the financial system from that perspective. Second thing, which is a big topic right now in the global crypto space, is the field of NFTs, non-fungible tokens. A lot of activity there. What is a non-fungible token? Today, if I send Andy Bitcoin, I'll be very happy. But every Bitcoin is like similar to another Bitcoin. It's very fungible. It's like $1 banknote is similar to another $1 banknote. What we have with NFTs is for the first time, we can prove that a certain asset is mathematically unique. Mathematically, we can prove it. So all the what I call the bullshit service providing that we have in the middle, conveyancing lawyers, for example, notaries in civil law countries, even think about the world of art, of galleries that have to prove the provenance, authenticity. All these things become basically a thing of the past. So an NFT, I can buy, let's say today, a piece of digital art. I know exactly that Andy was the buyer, what price he bought it to. I can buy them on the spot directly, no intermediary. Everybody sees that I have it, and it's actually there for the world to see. And then obviously, this has a lot of benefit. You can think about land titles, for example, any kind of birth certificates, health certificates, and the likes. And this is actually something that's happening right now. To just put things in perspective today, on a weekly basis now, as we speak, for the last couple of months, there's over $200 billion of volumes that are taking place a week of NFTs being bought and sold. So there's not esoteric concept. It's here, it's happening from that perspective. So a lot of activity on NFTs. And this obviously with the whole rise of cryptocurrencies going on, that has a big impact. One point related to this is obviously traceability. When we talk a lot about Bitcoin, cryptocurrencies, people think about drug dealers, about our criminals using it. Let me give you one piece of advice. If you're looking at doing anything illegal, do not use Bitcoin. You will get caught. I 100% guarantee you. Frankly, you have to be an idiot right now, criminal, to be using Bitcoin. Every single cryptocurrency transaction is traceable. This is why even there was a recent hack of $600 million was hacked on crypto. The hacker had to return the funds. Why? Because everybody can see the wallet, everybody can see where the money is. It's pretty much impossible to launder it. Frankly, the best way again to launder money today is using cash or the traditional banking system, as we know from that perspective, the activity going on there.
Henri, forgive me, I must come in here. This is such an interesting point you're making. I hope you don't mind me interrupting you. So there are people out there who say, crypto is like made for gangsters. It's made for crooks. It's made for people on the dark side. It's made for terrorist money. It's made for drug money. So you're putting a completely counterpoint to that. So please elaborate on this. It's fascinating to me that crypto could actually be part of the solution, not part of the problem. Tell us more. Tell us more, Henri.
Sure. And here I can tell you, obviously we work a lot with law enforcement, and I can tell you from every single, whether any security, treasury, tax office, when they discover how cryptocurrencies work, they love it for this very simple reason. Everything is public and traceable. So if I send you, let's say, Bitcoin, you will not know that it's Henri sending to Andy, but it'll be wallet number 12345 that sends a Bitcoin to wallet number 678910. The reality is that if you stay only in the crypto ecosystem, you don't need to actually show yourself to the world. The reality is at one point, you the Bitcoin, you have to buy it via what we call a fiat to crypto exchange, like a Coinbase, a Kraken, a Bitstamp, any of these exchanges. And if you want to sell it to go back to fiat, that's why you need to have this transaction. What happens is every single transaction is traceable. If I send you the Bitcoin and I'm a criminal, it takes 2 seconds. Law enforcement can trace it that it's coming from me. They can easily subpoena the exchange where they bought it from. And actually, we have all the information there, and it's very easily traceable. So, for example, they recently busted a pedophile ring in South Korea that's been operating for many years. And the only reason they were able to bust them, they operate in the dark web, which is really untraceable. They're able to bust them because at one point, some person will need to do a fiat transaction with an exchange. And the exchanges right now have all KYC, AML, frankly, in many cases, better than the banks because they're able to use the latest RegTech and LawTech technology. So really completely changes the game from that perspective. And this is why you're not seeing any criminals. I mean, to put things in perspective, in 2020, only 0.34% of crypto transactions were linked to illicit activity. In absolute terms, that was $10 billion. I mean, that is nothing. I mean, the Pandora Papers that came up with that are multiple of that just as one leak. So $10 billion last year, really. And this is one thing, I think one of the biggest misconceptions when it comes to crypto is this topic.
Thank you for such an interesting point and such a full response to my question. Thank you very much. Please do carry on. I interrupted you. Thank you.
And maybe, Joe, I'll just finish up with the last topic, which obviously this is what's happening. What's happening in crypto? I'm literally right now, as we see, we're in Dubai. I'm normally based in Hong Kong as well. I'm in Dubai right now. There's obviously, there's thousands of people here for crypto events this week. One big topic that's happening is I can tell you there's a growing movement of the financial ecosystem that is completely bypassing these banks, completely. And this we call this the world of DeFi, decentralized finance. Today, you can look at crypto trading, crypto asset management, even crypto stable coins in US dollar, and even getting crypto insurance in a fully decentralized way. That I mean, you're not dealing with any centralized intermediary. You're not dealing with FWD. You're not dealing with any law firm, any bank, any intermediary. This all happens peer-to-peer based on smart contracts, purely mathematical code. And this is actually for the first time, it allows us to actually have a first principle approach to financial services, completely rethink, reimagine how we want to deliver financial services. To put things in perspective, it's still very small. Last month, for example, there was only $150 billion traded on decentralized exchanges. I mean, only, depending how you look, there's trillions being traded every month on crypto right now on centralized exchanges. But really, there's a whole, I have people in my team at PwC who get their paycheck. The money immediately goes to crypto, and they only use decentralized DeFi platforms. Why this is important from a transparency perspective? First, it's first principles based. It's fully transparent. I mean, we know exactly who's trading, what's happening. You could embed some of these governance frameworks in there, and the governance is very rigid, So a lot of these ESG principles we have allow us to completely rethink them and basically reimagine how finance gets involved in the space from that perspective. So these are big changes that are taking place. This is the most exciting time in the history of finance, in the history of money. COVID absolutely catalyzed the developments that we have been seeing in the last couple of months, especially now what we're seeing with just to put things in perspective, in the last 6 months, 6 months ago, there was, 9 months ago, there was 100 million crypto users around the world. Now we're at 220 million, and the numbers are growing basically by the day. So a lot of activity in the space, a lot of action as well. So when we talk about reforming the financial sector, transparency, putting more ESG principles, and really trying to reimagine finance, I would argue everything that was happening in the past is great. It's a lot of goodwill. It was a lot of PR. Every bank had to have its GSD principles. European investors are pushing it. Now we really have the radical chance to do radical transformation in space that we didn't have before. And that's, I think, very, very exciting.
Wow, that's fantastic. Thank you very much indeed. That's a really uplifting talk. You're making me feel, Henri, and we'll go to questions and comments from others in a moment. You're making me feel that there's real wisdom in the old saying. I'll dig out who first said it in a minute. The old saying that rather than reforming a system, create a new one and replace the old one. That's the gist of it anyway. That seems to be the narrative around what you're saying. You're saying here that the old institutions, the old banks, etc., are just being bypassed. They're being short-circuited out of the equation. Is that how you see it? Yeah.
So Bitcoin, I think, was, to put things in perspective, was created 6 weeks after the crash of Lehman Brothers. It's not a coincidence. There was many times we're trying to fix this before. The financial crisis of 2008 really brought, for the first time, the innovation of Bitcoin and Satoshi Nakamoto is, for the first time, two people could send value to each other without any centralized intermediary. So if I want to send you money today, Andy, I have to go with a bank, a PayPal, a Venmo, whatever I'm using. With Bitcoin, I can send you, for the first time, a peer-to-peer transfer of value with no intermediary. Actually, I hope one day we find out who Satoshi Nakamoto is, because it's for sure Nobel Prize in economics. But as you guys know, the Nobel Committee never gives a Nobel Prize if you're dead. So you have to be alive. So that's one of the things that's the reality. The reality is also, we forget that there's people often feel that the financial system let them down. Today, the average cost of a cross-border payment is 7%, which frankly is unacceptable. Whereas with crypto, I had to send a couple of weeks ago a payment from Hong Kong to my young sister in Canada. My lovely HSBC bank does not work on Sunday. I don't know, maybe my bank goes to church. What I did, I just sent the payment in stable coin. My sister got it immediately on the spot. That money is not leaving the crypto ecosystem. And so this space is really growing very, very fast from that perspective and what is happening. So there's definitely some financial institutions are coming on board, but others are also trying to bypass it as well.
Thank you very much. Thank you very much, Henri. Wonderful. Very, very exciting. This gives me hope that we don't have to rely on trying to change what's wrong in the current system. We can just build a better one in the future. Thank you, Henri. Thank you very much. Would anybody like to respond to what Henri has said, and with any questions or comments? Scott, I know that you're a pretty big fan of tech generally. Scott, make yourself visible if you can, so we can see you if possible. And please share your reflections on what Henri has explained. Thank you.
So we are trying to digitize, right? So digitize means getting physical things into digital form, and digitalize is to create new business models that leverage off the fact that all your data and processes are digital. And by digitalizing, you enable new ways of doing things. And sort of in theory, I guess Bitcoin and blockchain are sort of one way of doing that, but we don't really work there. We just straight out try to strip out the frictions that separate investors from good ways of investing. And so you build a platform, there are economies of scale, which means you build once and offer many times. We can offer investment management products with sort of zero management fee, just purely performance fee. So we're trying to sort of enable investors to get access to global managers with no ongoing costs in a way that sort of scales with full alignment, because we're only paid on performance. We're paid if we create value, and transparency. So we can sort of, investors can can see and understand it. And I guess one interesting thing there, which we're thinking about, I'd be interested in other perspectives, is, a lot of money ends up in the big brand names because people otherwise sort of don't know what's going on and they're sort of scared. Perhaps if you can provide both transparency so people can actually see all the way through and know, really what's going on, and you can show a business model that's properly aligned. So in the same way that Vanguard's business model is, excess profits actually get rerouted back to their customers, their investors. So it sort of structurally creates a way of operating that is not what your usual investment manager is, which is how do I maximize my fees, which come directly from my clients' capital. So maybe we can start to address the somewhat dysfunctional marketing branding game of the very big players through technology and transparency and alignment. That's my input.
Very, very well put, sir. Very well put indeed. Henri, any response to what Scott's spoken about there? Any additions?
Absolutely. I think there's no doubt about it. All the large asset managers now are entering the crypto space. The problem is obviously we're trying to offer centralized offering to a lot of these investors are looking at it. What you see really at the cutting edge of crypto right now is actually funds that are completely tokenized. What means obviously for a lot of the hedge funds, the whole 220 model, if you're an institutionally accredited professional investor, you're able to access it, but the average mom and pop is not. The beauty with crypto, a lot of these crypto funds now, it's fully tokenized. So you can take these offerings, tokenize them, and actually allow the broader public to have access to it in very, very clear smart contract ways. I'll give you an example. Forget even as a manager, look at something like art, for example, right? We've been trying these art funds and all the likes over the last couple of years. I can take right now a digital piece of art, for example. I can separate into like a Van Gogh, for example. I don't have the money to buy a Van Gogh, but maybe I can buy 100,000 of a Van Gogh. And whenever that painting is sold, I automatically get my royalties and my rights out of it. I'll give you a very simple example. I'm Armenian by background. I just bought the first NFT of an Armenian artist. What happens with our young artists is whenever I sell that painting or that digital piece of art, the artist will automatically get the 7% royalty back to her for life to perpetuity. Right. So all these things that we have in place happen actually behind the scenes, completely autonomously, no intermediaries, and this can happen. But the reality is from a crypto perspective, digital assets perspective, we are now seeing, I can tell you pretty much every large asset manager will have an offering over the next 12 to 18 months. In this space, there's an advantage for new entrants because there's no, it's a level of playing field right now. That's why you're seeing a lot of players, especially on the quant side, Scott, where you focus on. On the quant side, there's obviously a lot of opportunities and a lot of funds that have been looking at the space from that perspective.
Fantastic. Really, really interesting insights. Thank you so much. Guys, what we're going to do now is we're going to go around and just check in with everybody to see if you have any final thoughts and comments before we start bringing the session to a close. So share with us any further thoughts you have about this topic of how should the finance sector in Asia be reformed. The conclusion I've come to so far is that it needs to be reformed using technology. Technology is capable of doing that. That seems to be the big message coming from Henri. Let's go to Rick. Rick, your thoughts, please. Anything else you'd like to add?
The only thought I had was what Henri said about mamas and papas being able to access the 2 and 20 hedge funds, and that's a good thing. Certainly isn't from my perspective.
What are your concerns there in terms of risk and not knowing what the product's really all about?
Just hedge funds generally, they're a complete waste of time.
Okay. All right. In terms of risk reward, too expensive, too opaque. What are your thoughts?
Just seen too many examples of them going pop.
Going
at the height of the 08 thing, we saw 3 and 30. They're just greedy. All the hedge fund is a mechanism to transfer wealth from the impatient to the patient.
Right. From the impatient to patient. I get it. Thank you, Rick.
The hedge fund guys are happy to get rich slowly. The idiots want to get rich quickly, and the banks prey on this fundamental greed, right, which is why we have what we've got in financial services. It's greed, lack of education, and quite frankly, the banks.
Thank you, Rick. Thank you. Anything else, Rick, before we move on to Gavin and to Sam? Rick, thank you very much for being with us today. Thank you. Gavin, to yourself, any final thoughts from you before we start bringing the session to a close?
Just thanks, Henri. That was a really enlightening presentation. Lots to think about for me. more of a question observation for me. We in insurance, right? We're trying to move to digital, just on your point around technology and the ability to kind of, make meaningful change. We've been trying as an industry, as a category, to move people to digital. It's easier, it's faster. But fundamentally, people still want to deal with other people. So I'm curious about the sort of role of people in cryptocurrency, right? Because we develop all of this like awesome technology and, but I still feel like there is some work to be done around sort of bringing in, or not forgetting the role of people.
Of people in that.
Thanks.
And thank you, Gavin. And I think the same point would apply to robo-advice, wouldn't it? I mean, I remember lots of people getting really excited about disintermediating the advisor by providing robo-advice, but that really hasn't taken on in the same kind of way. I wonder, though, if this is a phasing thing. I wonder if the millennials coming through are far, far more likely to use processes that don't involve people. So maybe the market's going to change very dramatically as far as that's concerned in the years to come. Thank you, Gavin. Very good indeed. Nicholas, are you with us? Have you stepped aside to make yourself a cup of tea or something? I think you might have done that. Sam Harley, any final thoughts from yourself, Sam?
Yeah, just thank you for the overview, Henri. I just think it's a very interesting space at the moment. So, I think for me, it's just difficult to foresee how it will affect everything. But just definitely keeping my eye on it, and just hoping to learn more so I can understand it.
That's very good. Sam, thank you very much. I think Nicholas has stepped away to grab himself a cup of tea or something. So we'll wrap the session up. Gentlemen, it's been very good to have you with us. I hope that was of some interest. We will be developing the content into a short video. We'll get it out online, share it amongst your contacts if you'd like to. Those of you that are pretty new to the Transparency Task Force, I hope the overview I provided about what we're all about was of some interest, and we'll bring the session to a close. Gentlemen, thank you very much indeed. Thank you. Have a good rest of your day. Thank you. Take care. Bye-bye.
Thanks, Andy. Thanks, everyone. Bye.
Cheers, guys. Bye-bye. Bye-bye. Bye-bye.